Good afternoon, everyone, and welcome to the media briefing for Kotak Mahindra Bank's Q2 FY22 financial results. We have with us Deepak Gupta, the Joint Managing Director of Kotak Mahindra Bank, and Jemin Bhatt, the Group President and Group Chief Financial Officer. I will request Jemin to first take us through the numbers, after which we can go into the Q&A session.
We talk about the results for Kotak Mahindra Bank, both standalone and consolidated for the July-September quarter, which we declared earlier today. Let me take the bank standalone first. We closed the quarter with a post-tax profit of 2,032 crores, which is compared to 1,642, which we recorded in the immediately preceding quarter, which is April-June. Our net interest income for this period stood at 4,021 crores, which is a tad higher than the previous quarter. We had a pretty large growth in the other income, with the other income growing at 26.5% on a year-on-year basis and 34% quarter-on-quarter. The fees and services, which includes distribution fees as well as the other general banking fees, had a pickup of 34% on a year-on-year basis on the back of distribution of insurance products, mutual funds, as well as a sharp rise in the debt capital market segment. The other general banking fees increased on a year-on-year basis by 25% as the activity levels picked up during the period compared to the same period last year. The non-fees and services other income, we clocked this period at 393 crores compared to 182 crores in the previous quarter. Our operating profits for this quarter, we ended with 3,120 crores, which is about 8% higher than the previous quarter, about 4% lower than what we were a year ago. We have made a provision both towards advances and investments of 424 crores this quarter, as compared to 700 and odd crores in the previous period. This also includes provision on investments, which we got on our books thanks to a settlement of a large NPA. So we ended the pre-tax profit of 2,696 crores for this quarter. If we look at our asset quality, we have actually seen the GNPA numbers drop quarter on quarter. We closed this quarter at 7,658 crores, which is absolute number lower than 7,932, which we had a quarter ago. Resultantly, our GNPA now stands at 3.19% as against 3.56 one quarter ago. And our net NPA number now at 1.06 as against 128 in the previous period. This quarter, we did have slippages on a gross basis of 1,293 crores, but we also saw recoveries and upgrades which are actually higher than the slippages during the quarter. And that actually meant that the GNPA number was lower than the previous period. Our SMA2 continues to be lower at SMA2 comprising people who are 60-day overdue but not 90 plus, and of the 5 crore plus variety is at 388 crores. We've been very slow on our restructuring. We've been very careful on our restructuring. And what we look at COVID-1 plus COVID-2, the total amount of restructuring we've done is all of 495 crores, which is 0.21% of our overall advances. And if I look at the MSME restructuring, which we have done, that's another 0.33% of our advances book. Our overall advances, we ended the period with advances book of just short of 2,35,000 crores, which is about 14.7% growth on a year-on-year basis, but importantly, 8% growth for the quarter. And this quarter, we've seen growth coming across a lot of segments. The home loan and the LAP businesses, which is the mortgage business, grew 10.5% this quarter, not annualized. We also saw pretty decent growth on the secured loans on the consumer side, as well as the unsecured pieces like credit cards and personal loans and consumer durables. The corporate banking and the SME book this quarter again showed growth of 8% plus, while on an annualized basis, the tractor business has continued to show growth. If I look at the credit substitutes also, which has grown in this period, and include the credit substitutes, our growth YOY on advances plus credit substitutes is at 17.2%, and for the quarter at close to 9%. We closed this period with a CASA of 60.6%. We've seen a current account growth on a YOY basis at 31.7%, and the savings growth at 13%. In addition to the 60.6 of CASA, we also have the sweep deposits, which are an incremental 8.3%, which itself has shown almost a 20% growth on a YOY basis. Our cost of SAR right now for this quarter ending up at 3.69%. We continue to have a pretty healthy capital adequacy ratio. At the bank standalone, we end with a 23.1% CAPAD overall, with Tier 1 itself out of this comprising of 22.1%. And this quarter, if I look at our credit cost and annualize it, it would be 63 bips for this quarter. The previous quarter, we had a high of 133 for the period. At the consolidated level, for this quarter, we end with a post-tax profit of 2,989 crores, which is significantly higher than what we've done in quarter one, which was 1,806 crores. And if you look at it this quarter, the non-bank profit after tax is a contribution of 32% on the overall number. In addition to the bank, we've seen Kotak Securities, the whole capital market pieces continue to grow. Kotak Securities recording all-time high quarter profit of 243 crores. They've also seen their cash market share going up to 11%. Kotak Prime, on the back of good collections, has seen the post-tax profit for the quarter at 240 crores. The other NBFC, Kotak Investments, bringing in another 89 crores of profits. Kotak Life, which had taken a hit in quarter one, April, June, thanks to large claims, has come back and clocked a profit post-tax of 155 crores this quarter, though that's lower than the same period last year. The mutual fund business bringing in profit just short of 100 crores for this year. Our overall assets under management, which we manage and this advise, which is at 381,000 crores, about a 40% rise on a year-on-year basis. And if I look at the relationship value of our advisory activity, has grown by 54% on a year-on-year basis. We've also seen this period the auto loans grow in the subsidiary. Our overall capital at the end of this period at 89,000 plus crores, and with a book value per share of 449 rupees per share. So those broadly were the highlights of what we announced earlier today. We'd be happy to clarify any points on this.
Thanks, Jamin. Saloni, I think you'd put your hand up first, if you'd like to go.
Yeah, hi, am I audible, Firoza?
Yes, you are.
Yeah, thank you, sir, for taking my question. You've posted healthy numbers. Also we've seen that the loan growth has come in at over 14%. So would it be correct to say that now you are ready to shed the conservative approach that you had adopted in growing your book? How do we see your strategy going here onwards? Because some aspects of your book, the loan book, have grown quite strongly, while other aspects still remain slow. So if you could shed some light on that.
Saloni, a healthy loan growth doesn't mean that we shed conservative approach. I think the conservative approach remains. What it means really is we are seeing the environment conducive to supporting a healthy growth. And that's what it really looks like. Up until probably last quarter, we were waiting and watching and looking out for signs to, give us comfort that this, growth is, looking good. So at this point of time, it gives us a lot of comfort to see that the opportunity all over, notwithstanding our conservative approach, still looks healthy. So it's not that we shed our conservative approach. It is just that it looks good and comforting at this point of time. Yeah, because the economy is looking good.
But are there any challenge areas? Because when you say that you still continue to remain conservative, what gives you that fear?
Yeah, I think some challenge areas still remain over here. For example, on the commercial vehicle side, yeah, it is still not necessarily looking very good. Yeah, so there are areas where we still want to watch, but there are many areas where it is looking far better now. Yeah, particularly if you see the various segments of the growth, all the secured loan businesses are looking very healthy. And I think we've started looking at the unsecured loan business also now. Yes.
So just one final thing, can you repeat the slippages number, please?
Yeah, so if you look at it, I said the gross slippages, and I'll clarify the gross word in a minute. The gross slippages were 1293 crores for this quarter, against which we had recoveries and upgrades of a number which is higher than that, roughly about 1350 crores. And when I say gross slippages, it would include people who slipped in this quarter and recovered in the same quarter. If I take that out, we'll be less than 1,000 crores.
Okay, thank you.
Okay.
Thanks, Saloni. Alec?
Hi, sir. You had seen a healthy growth both on the year-on-year and quarterly basis in home loans. Just wanted to check how much of that incremental growth in home loans is because of the 15 basis point reduction in rates as part of the festive offering, and also on the unsecured piece. If I see credit cards and personal loans, they have degrown on a yearly basis, grown on a quarterly basis. What's the outlook there, especially on the credit cards? There have been reports about the bank bidding for credit card portfolio of Citibank. So would you like to offer a comment on that?
No, on the home loan front, it's very difficult to say how much of that growth is coming because of the rate and how much of it is organic itself. I think it's a combination. In general, the demand for residential homes and hence home loans has gone up. But there is an element of balance transfers also in this, which probably is driven a lot more by the 6.5%. Really. So it's a combination. Really. Yeah, but in generally, overall, if you look at the home loan segment, yeah, the growth has been healthy. As far as your second piece on unsecured is concerned, yes. While on a Y-on-Y basis, it is still not caught up, but on a quarterly basis, if you see, yes, the engine is revving up. And as we start looking around, it is looking more comforting at this point of time. And remember, some of it is also, running off from the fact that we are into the festival season. And generally, the demand for unsecured loans is higher during this segment. At this point of time, yes.
So the balance transfer is mainly from NBFCs. What kind of NBFCs?
Well, it's very difficult to say whether it is specifically from NBFCs or no. I think it is overall. Overall, balance transfers normally are about a third of the total, account for about a third of the total growth. Really. Yeah.
Okay. Thank you, sir.
Okay, we'll go to Ankur. Ankur?
Thank you, ma'am. I want to ask, sir, from here, where do you see the growth coming? Because you have grown in home loan segment as well as corporate segment. Now, going forward, where more growth is expected, according to you?
Ankur, growth has just about started. So, so where else is not the question. I think it is all over. Like I said some time back, except for maybe some segments like commercial vehicles, I think the growth is reasonably all round. Yeah. And then there is significantly more comfort of it being sustained. Of course, the caveat of all of this is subject to no wave 3 always remains, but it is looking significantly better. Yeah.
Okay. Also, can you give breakup of 424 crore provisions?
A very small portion is on account of what you would say investments. If I remember, it's about 40 odd crores. The balance is on advances.
Okay, thank you so much.
Thanks, Ankur. Vishwanath?
Hi, sir. I hope I'm audible to you.
Yes.
Yep.
Sir, I just wanted to get a sense, this 3% rise in your NII versus your very strong loan growth. I'm just trying to understand the distance there. I mean, the NIM is still looking pretty strong, but on the NII side, as well as if you look at the interest earned in your statutory releases, there also the numbers have come down year on year. So I'm just trying to understand why this difference exists.
Sure. A couple of things. One is, and some of it can be technical. One is the fact that while the period end you've seen the loan growth happening, a large part of the loan growth we've seen towards the end of the quarter. So it doesn't really bring me NII for this period. So that's clearly one bit, because and you'll see some of that bringing in interest income in the coming period, which is the October-December period. Second, importantly, is the fact that if you look at the growth, a lot of growth, and we are comparing YOY right now. If you look at the growth, a lot of the YOY growth has been happening in areas like home loans, has been happening in the secured loan businesses, where the yields are lower. Whereas if you look, since I think the previous question talked about it, if you look at the YOY basis for the higher yielding loans, whether it is the unsecured personal loans or credit cards or some of the agri loans, they've actually degrown. So to that extent, the mix change has also impacted the NII. And last year we were in a sweet spot when we had reduced the savings rates towards the middle or end of the quarter one, where the flow of that on the MCLR and others benefiting the borrowers, which happened over a period of time. So we got a benefit of that in the previous period. So it's actually a combination of all of this. And as I said, the mix change as well as the growth in this quarter happening towards the end of the quarter has been a big factor.
Yeah, but overall, if you see the NIMs are more or less constant. So, there is no issue overall.
Yeah, that was my question. Is it largely because your deposit rates would have fallen faster?
No, it has nothing to do with that, really. Like Jaimin explained, some of the growth which we are talking of, you see, the growth reported is an end of period piece, really. So a lot of the growth has really come towards the end of the quarter. So it will catch up next quarter onwards, really.
Okay. One more question I had was with respect to your other income side there. I mean, despite your net interest income growing slower, the other income growth has been quite strong. Where is most of this coming from?
A couple of areas. One is, as I said, the distribution income has revved up pretty well. And that includes not just the traditional mutual funds and insurance, but we've also had pretty strong growth in the syndication business, particularly on the debt capital market side. On the rest of the businesses, if you look at, again, the YOY businesses, the growth has happened because activity levels have been higher. So in every segment, so if you look at the processing fees on loans, relating to credit cards. So all of that this quarter, if you compare with the same period last year, each of them would show about a 20-25% growth.
Understood. Thanks.
Thanks, Vishwanath. Neetu, you want to try now? Yes.
Yes, hi. Mr. Gupta, Mr. Bhatt, sorry to make you repeat just the slippage figure that you said. Could you give the exact gross addition and the comparable figure for the previous quarter?
Okay, fine. So I'll give you that. 1293 is the slippage for this quarter, against which we had the similar period number last quarter was 1537. And against that, if I look at recoveries and upgradations this quarter, we had about 1350 odd crores, which was about 700 crores in the previous quarter.
So Ritu, remember what Jaimin mentioned, really. The number of slippage is a gross number. So some of it probably has got collected within the quarter itself, really, also. If you include that, then the gross slippage is, like Jaimin explained, less than even 1,000.
Okay, got that. The second thing, Kotak Mahindra Bank was keenly eyeing the Citibank retail consumer business portfolio. Any update you could give us on this? We understand you're looking to make a bid.
It's like this. Now we continue to maintain that we are quite open to looking at inorganics in any area, in whichever area we operate in the financial services space, whether it's bank or otherwise. But I don't think it's correct to speak on any particular one, whether it's this or anybody else.
All right, thank you.
Thanks, Ritu. Hi, Joel.
Can you hear me?
Yes, Joel.
Yeah.
Thank you. Just a clarification, sir. Your employee costs have risen, plus your operating expenses also have risen this quarter. Just an explanation on that. You've made a note there. Note 8 says about something about employee costs or some technicality. But can you give a simpler explanation on both operating as well as employee costs?
See, a lot of this is investment. As you press the accelerator on growth, you need to have your people in place. For example, home loans. You need to reach out to a lot more customers than what we were doing 6 and 12 months back. So you need all of those employees out there. So all those costs start hitting you. Or when you do a lot more home loans, the brokerage payouts happen upfront really. So a lot of those cost increases really are what I call investments. Yeah, the benefits of all of that you will see progressively as you go forward really. Okay. And the same again on the employee side really.
Okay. I mean, pointedly, have you all hired more people? What does it mean? I mean, in the sense.
Yes, there has been a lot more hiring on the sales side. Yeah, for things like consumer durable businesses, for home loan businesses, for credit card businesses. So a lot of hiring of feet on street for these businesses. A lot of hiring happening on the technology side, really, analytics side. So some of these businesses are very significant investments which we are making there.
Okay. My second question is on the corporate demand. So you've mentioned about home loans and credit cards, and of course everything depends on how the pandemic, how sooner we have a total control on it. Corporate side, are you all seeing any improvement in the situation? I know companies are now fabulously deleveraged. They're probably sitting on cash, but do we see any demand there in terms of working capital or in terms of some brownfield expansion? Because that's been the
working capital demand, Joel, is there. Yeah, the working capital demand is there from all over. Yeah, I think the capex related demand is still very sectoral. Yeah, so there are some set of industries where you are seeing capex starting already, and there are some places where you're seeing at least the planning starting. But a big time, if you look at capex, we're probably still 6 to 12 months away.
Thank you, sir.
But having said that, the SME side, we are seeing growth starting to look up really. Yes.
So where are we in terms of SME? In the sense, are we back to pre-COVID levels in terms of demand? Would you say that?
No, I don't think it is still back to pre-COVID level. See, it was right down, and then from this quarter onwards, you're seeing a movement upwards. So I think it will still take another 1 or 2 quarters to get back to pre-COVID levels on some of these segments. Yes.
Okay, sir. Thank you so much.
Anurag?
Sir, can you hear me?
Yes, Anurag.
सर जिस तरह से अभी आपने बताया कि होम लोन में 1/3 जो पोर्टफोलियो है, 1/3 पोर्टफोलियो है वो बैलेंस ट्रांसफर की वजह से आया है और यू वर पायनियर सर, आपने सबसे पहले फेस्टिव ऑफर की शुरुआत की थी और उसकी वजह से कई बैंकों को भी रेट्स कम करनी पड़ी क्योंकि कई ने बताया भी कि भाई बैलेंस ट्रांसफर वगैरह हो रहा है। तो अभी सर 8 नवंबर को आपका ऑफर पूरा हो रहा है और बाकी सब बैंक है जो 31 दिसंबर तक है, तो क्या ये ऑफर और एक्सटेंड होगा?
अगर डिमांड अच्छी रहेगी तो करेंगे। सी वो ऑफर 8 नवंबर के आगे रहेगा कि नहीं डिपेंड करता है ओवरऑल इंटरेस्ट रेट कैसे बिहेव करते हैं। यू सी, सो जस्ट नाउ I think we are seeing a lot of demand and then a lot of demand even from buying. See, fresh home buying is happening really. So that demand is good just now. Yeah, and then very significantly better than what we saw in the past. So let's see. Just now the scheme is up to the 8th of November. उसके बाद डिमांड अगर रही और इंटरेस्ट रेट मूव नहीं किए तो एक्सटेंड भी हो सकती है।
सर इसी क्वार्टर में हमने देखा है कि इंश्योरेंस सेक्टर के अंदर एक बड़ी डील हुई और उसने एक बेंचमार्क सेट किया है। और सर एफडीआई में बदलाव के बाद क्या जो सर आपकी भी जो लाइफ इंश्योरेंस कंपनी है वहां पर किसी तरह की हिस्सा बेचने की वगैरह बातचीत जारी है? अभी निकट भविष्य में, नियर फ्यूचर में किसी भी तरह की कोई प्लानिंग नहीं है?
नहीं, बेचने की तो अभी चांस नहीं है, पर जैसे जमीन सर ने बोला कि वी आर ऑलवेज लुकिंग आउट फॉर सीइंग इफ देयर इज एनी अपॉर्चुनिटी फॉर इनऑर्गेनिक, एंड वी वुड बी वेरी हैप्पी टू look at opportunities in the insurance sector. Yes.
ठीक है सर, थैंक यू सो मच सर।
Thanks, Anurag. Shritama.
Thank you, Firoza. So your corporate loan growth has been at over 9%, which is somewhat higher than most of your peers and the industry level growth. So what exactly has worked for you, and where is this growth coming from?
No, I think the growth is all over, yeah. But like I said, it is still primarily working capital related growth. The capex related growth is still stray and only specific sectoral. I think all of us should be happy that there is growth and good visibility of the growth continuing at this point of time, really. Yeah, but it is reasonably all over on the working capital side.
Thank you.
Thanks, Shritama. I think Ben has a query, but Ben has poor audio. Okay, Ben's query is, what is your home loan AUM?
We don't disclose home separately, but as we put out the mortgages, which is home and lab together, is about 61,500 crores, which compared to what we had last year at about 47,000 crores.
And how much of the total AUM, which I'm assuming means total?
Yeah, so total advances book as against that would be, for this year, we closed at 2,34,000 crores. So that's 61 on 234.
Okay. And Chris's input was, just wanted to see if they can repeat their comment on SME growth.
Yeah, SME is looking up actually. Yeah, both from a working capital point of view, and some of them, particularly the downstream ones of the cement, chemical, pharma types, are also looking at capex. So there is a decent visibility of growth on the SME side, really. Also, that piece also is started to look up now.
And the second question is, can you give us some guidance on NIMs for the year?
Yeah.
Actually, it's as we talked earlier, we are not likely to see big upswing or big downswing. I mean, that we are going to be in that range. I mean, we clocked this quarter at 445. Again, depends on what grows going forward, which part of the mix changes. And to that extent will depend. NIM would be a consequence. We're not chasing up any particular NIM. But again, it will come out on the basis of where the growth happens in the advances as well as the investments.
Yeah, but if you broadly see us, we've sort of normally kept our NIMs in the 4.25 to 4.6, 4.65 range. So I think it should be in that. It's very difficult to monitor it more fine-tuner than that, because it depends ultimately on the mix. So if you do a lot more of home loans and mortgages, it'll move towards the lower end. Yeah, if you start doing unsecured, it'll start sort of moving up, really. But it broadly will be in this range, I think.
Thanks, Deepak. So, Vashri, I think your hand was up. I'm not sure whether you had a question, whether I put your hand down by mistake.
Hi, sorry, no, I just wanted to ask about the provisions part over here. Do you think that 65% PCR is good enough, or do you want to kind of raise it? You have raised it from 3 months before, but do you want to step it up further? And if yes or no, why?
Well, you must look at PCR from what is the basic construct of our assets. Yeah. So if you have more secured or more AAA type of assets, yeah, you can do with the lower PCR. If you have more of unsecured nature of assets, then you need a higher PCR, because ultimately PCR is really telling you how much will you lose. And let me give you an example. If you take a retail loan, a home loan, for example, it's a secured asset. Yeah. If you have to recover and you lose money on that, you'll probably lose about 25%. Yeah. So a PCR of 25% is good enough if you have a home loan. On the other hand, if you have an unsecured loan, let's say a credit card loan or a personal loan, then you lose a very large part of your principal, which means if you have unsecured exposures, you require PCRs of close to 80 to 90%. Yeah. Right. Now, we have a pretty healthy mix of secured and unsecured. So I think 67% is a pretty good PCR coverage for us.
Right. I also want
just add one. Just add one more thing here, which is in addition to the specific provisions, if you look at our overall provisions which we carry, and as we said, we've not really dipped into the COVID provisions and everything else. Our total provisions, if you look at, we are almost at 100% of our GNP.
Right. Yeah, that I saw. Sir, also I wanted to understand in terms of the relevance of the credit card business overall. I wanted to understand, like, given that we are leapfrogging from directly banks, online banking to maybe digital payments, how important is credit card as a business segment to grow in this world of fintech revolution? How is it bigger?
I think
strategy?
I think don't look at Sushi. Don't look at the form factor being necessarily a plastic. Yeah. At the end of the day, ultimately it is credit and it is payments and it is revolution or revolving of that credit in a certain percentage of cases, but primarily helping you make payments. Yeah. The card per se is a form factor. Ultimately, you have a customer who needs to make payments, and once in a while he or she requires credit, really. So that customer is important. Remember that, really. Yeah. It's less the form which is important.
But
really.
for you,
it's not that plastic will run away overnight. I think it will take some time. So that's why it makes sense.
For you as a business segment, does it make sense to focus a lot and invest a lot in this segment of plastic money?
Oh, well, it's not about, like I said, the plastic. It is a lot more to do with the customer. So I think it makes a lot of sense to invest in that customer. And that is, yes, a very significant part of our strategy.
Cool. Thank you so much, sir.
Yeah.
Thanks, Subhashri. Vishwanath?
Hi, sorry. I just wanted one clarification, sir, about the balance transfer and the home loan book. You said a third of the growth. Is that what the number is, or is it a third of the book now?
No, third of the growth, really. Third of the growth, the delta.
Okay. And how much would it have grown quarter on quarter?
So quarter on quarter, we would have grown from about 55 to 61, about 6,000.
So roughly a third of the 6,000 crores, so about 2,000 crores came from there.
Yeah.
Got it. Got it. I just want to clarify that. Thank you.
Yeah.
Okay, that's it. Okay, sorry. We have Mayur also has a question. Yes, Mayur.
Yeah, this is not a result question, but I thought I'll just try. Is there any statutory requirement for Kotak to dilute stake in the insurance subsidiaries?
Not really. Not really. I mean, we if you go back to this thing, we picked up our partner stake, which was Old Mutual, in 2017 October, if I remember right, and that was done after approvals from both the RBI and IRDA, which helped us to take our stake from 74% to 100%. So since then we've been holding that, and there is no specific stipulation for us to come down.
Thank you.
Thanks, Mayur. Subhashri, you had another question.
Sorry, yeah, I just had one question on the deleveraging part. Are you seeing any massive deleveraging by the companies, repaying, and that could be a little bit of a pressure in terms of your margins, or I'm trying to understand what kind of way or shape it is forming up on the balance sheet.
But that's more from some sectors, say, for example, the sectors which are sort of booming, let's say if you look at steel, for example, or you look at cement, for example, some parts of pharma, for example, they're doing exceedingly well, at least some of the bigger entities in each of these sectors. So yes, because they're throwing up so much cash, they are probably deleveraging also. But in a lot of other cases, it's not deleveraging, it is refinancing, basically, yeah, because interest rates are lower, so you have a good opportunity of reducing your overall costs, really.
Is that a part, the deleveraging part, is that working out a little bit on the balance sheet in terms of the net interest income growth? Is that a little bit of a
No. So the NII growth, like Jeremy explained, is more a timing issue. Yeah, it's because the growth has happened towards the latter part of the quarter. It's more to do with that, really.
Last question. I'm sorry I'm taking so much time. I just wanted to understand your outlook. How do you want to kind of go ahead in terms of the mix between consumer lending and corporate lending? Will you, given that you were the pioneer in terms of the home loan competition in terms of interest rates this time, would you want to continue with this competitive spirit, and would you want to focus on consumer lending for the next couple of years, if not more?
No, so actually it has nothing to do with the competitive positioning. It is more to do with the risk-adjusted returns and the opportunities. Yeah, there are times when the risks, far outweigh the apparent returns. So those times you probably have to have your foot on the brake, really. At other times, and we're seeing probably more of those times now, at least for the last quarter, you got to move that foot off the brake and probably press the accelerator, because the risk-adjusted return is looking attractive, really. And I think it is so not just for, let's say, the corporate segment, it is looking so even for the consumer segment at this point of time. Like I said, there are some segments where it is probably not looking still good, things like commercial vehicles and all, which we'll have to wait and watch for maybe some more time. So there is no specific choice between कि consumer करना है and corporate नहीं करना है. I think the opportunity is looking good on both sides, really, at this point of time.
Thank you.
Thank you.
Thank you. I don't think we have any further questions. Thank you, everyone. Unless Jemin or Deepak, you have anything to add, we can say goodbye.
No, I think just like the two of us explained, growth is looking better at this point of time across a wider set of segments, and recoveries are also in control. So all of that gives one a far more comforting feeling to, like I said, take the foot off the brake and start moving it towards the accelerator. Thank you.
Okay, thank you. Thank you, everyone. Thank you for attending.
Thank you.